Hello everyone, and welcome back to the channel. Today, we're taking a deep dive into Applied Digital Corporation, ticker APLD. If you've been following the digital infrastructure space, you know that APLD has been one of the most talked about stocks recently, with dramatic price swings and significant news making headlines. Over the next 18 minutes, we'll cover everything you need to know about APLD, its business, recent developments, stock performance, financial health, analyst outlooks, and what the future might hold for this high-flying tech infrastructure company. Let's start with an overview of Applied Digital Corporation. APLD designs, develops, and operates digital infrastructure solutions, specializing in high-performance computing, HPC, cloud services, and data center hosting. The company's facilities are optimized for industries such as artificial intelligence, AI, machine learning, and even blockchain, providing the critical backbone for the next generation of tech applications. APLD operates through three main segments: data center hosting, cloud services, and HPC hosting. Their focus is on delivering energy-efficient, scalable infrastructure to meet the skyrocketing demand for computational power in today's digital economy. Now, let's talk about recent news and developments. APLD has been at the center of a whirlwind of activity over the past month. The biggest headline was the announcement of a massive 15-year lease agreement with CoreWeave, a prominent NVIDIA-backed cloud computing firm. This deal covers 250 megawatts of data center capacity at Applied Digital's Ellendale, North Dakota facility and is projected to generate approximately $7 billion in revenue over the life of the contract. The market reacted with tremendous enthusiasm. APLD shares surged 128% in just days, breaking past key resistance levels and reaching an intraday high of $15.42. However, the excitement was short-lived. Shortly after the deal was announced, a regulatory filing revealed that CoreWeave had sold its entire equity stake in Applied Digital, reducing its beneficial ownership to zero. This unexpected move sent shockwaves through the market, and APLD stock quickly reversed course, plummeting 33% in a matter of days. The shares closed recently around $10.24, giving up more than half of their gains from the rally. Trading volume also dropped sharply, signaling a significant shift in investor sentiment and a loss of confidence among some market participants. Let's break down the financials. Applied Digital's most recent quarterly report showed revenue of $52.9 million, up 22% from the prior year. That's solid growth, especially in a sector that's seen increased demand for digital infrastructure. However, the company is not yet profitable. Net loss attributable to common stockholders was $36.1 million, which is up 43% from the prior year. On an adjusted basis, the net loss was $17.8 million, and adjusted EBITDA was $10.0 million. Looking at the full-year numbers, APLD generated $221 million in revenue but posted a negative profit margin of -110.4%. The company's operating margin was -34.7%, and return on equity was -79.2%. These figures reflect the challenges of building out large-scale digital infrastructure while managing costs and scaling operations. Still, with a market capitalization around $2.6 billion and a focus on high-growth areas like AI and HPC, APLD has a lot of potential if it can execute on its strategy. What about insider and institutional activity? While there haven't been any major insider buying or selling sprees reported recently, the dramatic move by CoreWeave, a major partner and former shareholder, has been a red flag for some investors. Institutional ownership remains significant, and many analysts continue to monitor the company's progress closely. The sudden exit of CoreWeave's equity stake has raised questions about the long-term commitment of key partners, but the underlying cloud contract remains in place. Let's look at what analysts are saying. Despite the recent volatility, Wall Street analysts remain largely bullish on APLD. The consensus rating is a strong buy, with a median price target of $14 and targets ranging from $12 to $18. Out of 13 analysts, 8 have a buy rating, 1 has a hold, and none have a sell. The most optimistic forecast comes from JMP Securities, projecting a 55.8% upside from current levels, while the most conservative target is from Craig-Hallum, suggesting a more modest 3.9% upside. This overall positive sentiment is supported by the company's strategic positioning in the fast-growing AI and digital infrastructure markets. However, it's important to note that some analysts have recently downgraded their outlooks or lowered price targets in response to the CoreWeave equity exit and recent volatility. The market is clearly taking a wait-and-see approach, and investor confidence will need time to rebuild. Let's discuss technical analysis and market sentiment. APLD's stock chart tells the story of a company experiencing extreme volatility. The recent rally and subsequent sell-off have left the shares trading well below their highs, but still above pre-surge levels. Key support zones are being watched closely, especially around the $6 mark, which could provide a floor if the decline continues. Technical indicators are mixed, reflecting uncertainty and the need for the stock to stabilize before a new trend can emerge. Market sentiment has shifted from euphoria to caution, with investors now focused on whether APLD can deliver on its promises and prove that the CoreWeave lease will be financially beneficial even without CoreWeave's equity participation. Let's look at some of the risks and opportunities for APLD. Risks. Volatility. APLD is a small-cap tech stock with high volatility, making it risky for short-term traders. Profitability. The company is not yet profitable and continues to post significant losses. Partner uncertainty. The sudden exit of CoreWeave's equity stake has shaken investor confidence. Regulatory and competitive pressures. The digital infrastructure sector is highly competitive and subject to regulatory scrutiny. Opportunities. Growth markets. APLD is well-positioned in high-growth areas like AI, machine learning, and HPC. Strategic partnerships. The CoreWeave lease is a major contract that could drive long-term revenue growth. Energy efficiency. APLD's focus on energy-efficient data centers resonates with current sustainability trends. Analyst support. Despite recent setbacks, Wall Street remains largely bullish on the company's prospects. Let's zoom out and look at the bigger picture. The global demand for digital infrastructure is only expected to grow, driven by the rise of AI, cloud computing, and data-intensive applications. To wrap up, Applied Digital Corporation is a company with tremendous potential, but also significant risks. The recent roller coaster ride in the stock price, driven by a landmark contract and a sudden partner exit, highlights the volatility and uncertainty inherent in the digital infrastructure sector. While analysts remain optimistic about APLD's long-term prospects, investors should be prepared for continued volatility and closely monitor the company's execution on its strategic initiatives. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.